Hello everyone, this is Dr.P.Syamala from the Department of MBA International Business, Acharya Nagarjuna University. Coming to today's session, we are going to learn about corporations. In previous class, we have studied about sole proprietorship, partnership, and now we are going to study about corporations. Right? So, what is a corporation? What are the legal aspects that are encountered in corporations can be studied here. Okay, so a corporation means it is a legal business form that is separate from its owners and treated as a separate legal entity from shareholders. Okay, so that is a corporation. Corporation is nothing but a separate legal entity. Here owner and the company both are treated separately. Okay, so that is why a corporation is a legal entity, a separate entity. Okay, it is a separate entity. So company treated different and the owners will be treated differently. Okay, so the shareholders, board of directors and officers are the basic corporate structure in this corporation. Okay, who shareholders, okay, board of directors and the officers. So the basic corporate structure will be like that. Okay, so the shareholders are the investors and the people who own the company. So corporation means it is formed with shareholders, investment of shareholders. Okay, so shareholders are treated as the owners of the company. Okay, owners of the corporation. So and it means that they purchase the stock and legally possess the assets of the business. Okay, so corporations they are treated as the most common form of the business, and here we can see limited liability here. Okay, so liability is nothing but the debts that to be paid by the company. Okay, so here that will be limited to the owners. Okay, why? Because investment will be made by the shareholders in the company, and here company is treated as separate legal entity. Okay, and owners are different or company is different. Okay, see here, company different, owners different. So company is treated as a separate legal entity. Therefore, if at all it can be treated as a liability can be treated as limited towards the owners. Okay, so if at all the company went to any losses, then shareholders will be liable not personally but to the extent of the shares that are purchased by them. Okay, so to that extent shareholders will be liable. So here owners are free, they their personal assets will not be liable. Okay, so therefore here under corporation this is treated as a separate legal entity. So we can see that here limited liability will be there. And corporations are established when owners file articles of incorporation with a state. Okay, so this will be the formation of the corporation, right? So how these corporations are formed means shareholders are the owners of the corporation and they will file articles of incorporation with that particular state where they are residing. Okay, so each state will have different rules, varied rules on how these companies must operate in their state and what fees they have to pay. Okay, likewise. So corporation means it is a legal entity whose investors purchase shares of stock. So that is why we are calling shareholders as the owners of the company or the corporation. Okay, so they do this to serve as a proof of their ownership interest in it. The entity acts as a legal shield for its owners. Okay, so it means that they are typically not liable for the corporation's actions, who the owners of the company. Okay, and here how the shareholders are benefited from the corporation means dividends will be paid. Okay, and also appreciation in the value of the shares will be increased. Okay, so corporations have most rights and obligations as individuals. Okay, like being able to enter into contracts, hire new employees, own assets, incur obligations, and pay taxes also. Okay, so a board of directors that shareholders elect represents their interest. Here in corporations, shareholders elect the board of directors. Okay, so shareholders has the right to vote. Okay, they have many rights. Shareholders have different rights in the corporations. Okay, so they will elect the board of directors in order to see the activities, regular activities in the business. Okay, so how these corporations work means individuals or group of people, they create a corporation with a shared goal, that is nothing but to make a profit. But uh, we can see it under corporations, both profit corporations and non-profit corporations also. Profit corporations are, their main aim is to get profits. Okay, and in the form of dividends, those profits can be shared to the shareholders or the owners of the corporation. Okay, but if we see in non-profit organizations, okay, so they are not liable to pay the taxes, and at the same time they work for the what to say, like their motive is non-profit. Okay, so finally we can say that a corporation means it is a legal entity, separate legal entity, and distinct from its owners or stockholders. Okay, and it is an artificial being created by operations of law, but not by, for example, like a partnership deed. It is not created with a contract or else by a deed. It is an artificial being created by operation of law, created by operation of law. Okay, so having the right of succession and the powers, attributes, and properties expressly authorized by law or incident to its existence. Okay, so corporation means it is a legal, separate legal entity, and we can differentiate this corporation from its owners or the stockholders. Okay, so and if we see this creation means it involves legal process called incorporation, means legal documents like articles of association, charter, etc. should be submitted with the ROC. Okay, and if we see the features of corporation, so what are the features of corporation? First one is artificial being. So what does artificial being means? A corporation is an artificial being with a personality separate and apart from its individual shareholders or members. Okay, so that is known as artificial being. Natural means the persons, the shareholders or the owners will be treated as a natural persons. Here artificial being is treated means corporation is considered as artificial being. Okay, which has a separate legal entity, means it is different from. Okay, or else owners or stakeholders are differentiated from this corporation. Okay, so it means that the liability of the owners or the stockholders is limited. Okay, so fully the corporation will be responsible for the liability. Now if we see created by the operation of law, as I said before, corporation is not created by entering into a contract or else by partnership deed, by agreement, etc. It is created by operation of law. It means that it cannot come into existence by mere agreement. Okay, of parties, as in case of business partnerships, as we see. Okay, so corporations require special authority or grant from the state, either by special incorporation law that directly creates the corporation or by means of general corporation law. Finally we can say that it is created by operation of law, means a special incorporation law through a special incorporation law or general corporation law. Okay, Next one is right of succession, means it enjoys the right of succession. A corporation has capacity for continued existence regardless of death, withdrawal, insolvency, or incapacity of the individual shareholders or members. Okay, so succession is nothing but the continuity of the corporation. It means that regardless of death of a shareholder, withdrawal of a shareholder, or else insolvency, incapacity of the members of the corporation will not end the corporation. Okay, or else the transfer of ownership of shares of stock, all this does not dissolve the corporations. Okay, so there will be a continuity in the corporation. So this is another feature of a corporation. So, and if we see, it has powers, attributes, and properties expressly authorized by law or incident to its existence. Means expressly means, as I said before, it may be in oral form or in written form, either it may be. Okay, it has powers and attributes. Okay, means we can see here corporations are allowed to enter into contracts, sue and can be sued, own assets, remit federal and state taxes, and borrow money from financial institutions. So those are the powers and attributes and properties which are expressed. Okay, so through law or else through incidents also. So how can we say for this? For example, an investment by a transportation company in an insurance corporation. Okay, see, transportation company, okay, entered into a contract, okay, in an insurance corporation, or else it entered into insurance corporation. Okay, transport corporation into insurance corporation, designed to reduce insurance cost. Okay, this may be interpreted as an act that is reasonably requisite and necessary to carry out business of land transportation. Okay, so it is because insurance cost from part of the legitimate expenses of a transportation owner. Okay, and if we see limited liability. Okay, so what does limited liability means? Here corporations grant owners limited liability against debts and lawsuits filed against the company. Why? Because company and owners are different. Okay, therefore any loans, credit cards, mortgages, or revolving credit with vendors are the sole responsibility of the company only. The same applies to lawsuits or insurance claims against the company also. So limited liability is best depicted when a company endures financial hardships and files for bankruptcy. Okay, so payroll, taxes, debts are paid before any shareholder receives payment from the remaining assets. Okay, but shareholders do not have to pay anything if these assets are not enough to pay the debts. Okay, so limited liability can be seen here for the stockholders of the company. Fully corporation is responsible, and these stakeholders or the shareholders are responsible to their investment only. Okay, so up to the investment they have invested in that corporation. So that is another feature. If we see double taxation, this is another feature of corporation. So double taxation means for smaller corporations, double taxation is a serious consideration. We have large companies and small companies. So for smaller corporations, double taxation is very serious consideration, because the corporation is taxed on earnings at the business level. Okay, and profits that are distributed to shareholders are also taxed as dividends. Okay, so here double taxation means both the company and here the shareholders are also taxed. So double taxation is seen in both the cases. So the overall revenues and how much is distributed to shareholders have a substantial financial impact on the owners. Okay, So, and here we will study, there are different types of corporations like C corporation, S corporation. Okay, so depending upon that, double taxation can be levied. So we will further see those types of corporations. Okay, but as far as now features means, there will be double taxation, limited liability, continuity, and it is created by operation of law. Okay, authorized by law, and it is an artificial being. So if we see formation of a company, how the company is formed means, company is incorporated by the shareholders. We all know that. Okay, by investing in the, or else by purchasing the shares or stocks of a corporation, they will form a company. Okay, so in this process, okay, incorporation involves drafting of these articles of incorporation. Okay, so articles of incorporation charter should be submitted, or else in the formation of a corporation, articles of incorporation is necessary. Okay, so what does this articles of incorporation included? What are the details that are seen or given in the articles of incorporation means, okay, like the name of corporation, address of the name and address of the registered agent, type of the corporate structure, like type of corporate structure means profit or non-profit corporation, okay, or else C corporation, S corporation, okay, publicly held corporation, private health corporation. Likewise, different types of corporate structures will be there. So what type of corporate structure is there, so that details will be given in these articles. Okay, and the name and address of the initial board of directors, number and type of authorized shares. Okay, we have here before going to shares, before selling the shares, two types of shares will be there. Okay, so common shares and preferential shares. So how many common shares were issued, how many preferential shares were issued, okay, what are authorized shares, all details should be given there. Likewise, duration of the corporation, if it wasn't established to exist perpetually, means a continuity is not there, means what is the duration of the corporation, if at all. Okay, and the name, signature, address of the incorporator, who is the person in charge of setting up a corporation. Okay, so these are the details that should be given in the articles of association. Okay, so for example, Amazon's certificate of incorporation, okay, it states that the corporation's purpose is to engage in any lawful act or activity for which corporations may be organized under the General Corporation Law of Delaware. Okay, so likewise, a certificate of incorporation will be given. So if we see after the formation will be through incorporation by drafting the articles of association. Okay, so who are the persons involved here? Shareholders will be there, board of directors will be there. Okay, so and shareholders are the persons who are responsible for payment of their own shares here. Okay, if at all the company went to losses, means to what extent they have their share, to that extent they are liable. Okay, so if at all the profits were there, so here the profits of the company will be given in the form of dividends. Okay, here see, in the form of dividends it will be given, profits will be given to the shareholders. Or else if at all the company undergoes losses, so to what extent they purchase or else they invested in the company, to that extent they are liable to pay off the debts. Okay, likewise the directors, see here shareholders are only responsible for the payment of their own shares, to what extent, to that extent they'll pay. Coming to directors of the company, they are responsible to day-to-day activities. Okay, they are not at all concerned to about the payment of these aspects. Okay, they are concerned to, or else they are responsible to day-to-day activities. Okay, means they have to look after the interest of the shareholders. Okay, so small companies have a single director. Okay, and larger companies may have more than a director. Okay, and if we see here, shareholders will elect the board of directors and in an annual general meeting. Okay, so they will elect, shareholders will elect the board of directors in order to see the day-to-day activities in the organization. Okay, why? Because we have thousands of shareholders, millions of shareholders for a corporation. So all of them, they cannot see the organization. For that, in order to look after the corporation, board of directors were elected by the shareholders in an annual meetings. Okay, so if we see uh, here in this articles of association, articles of incorporation, it include the limitations of the director's liability, actions by stockholders without a meeting, and the authority to call special meetings of stockholders also. Okay, so not only annual meetings, special meetings can also be conducted by the stockholders if at all there are any liability is there on the side of the directors. Okay, why? Because they have to see the, they have to run the corporations, the day-to-day activities are seen by those directors. Okay, so each state has certain mandatory provisions that must be contained in the articles of incorporations and other optional provisions that the company can decide whether to include or not. Okay, it depends upon each state. Each state has different provisions. Okay, regarding each state has different laws regarding this formation of the corporation. Okay, so many states charge filing fees for a business that incorporates in the state, whether the business operates there or not. Okay, as the legal aspects are different from states, likewise the filing fees will also be different while incorporation. Okay, so a business that is incorporated in one state and is physically located or doing business in another state must register in the other state as well, which involves paying that state's filing fees and taxes, right? So if at all a business is incorporated in one state, okay, but it locates in another state, means, okay, so wherever it located, okay, it has to pay fees there and also taxes there only. Okay, and here, so all these aspects will be stated in this articles of incorporation. Okay, so another key corporate document is the bylaws. Okay, which outlines how organization is to be run. Okay, so all these, how the organization should be run, will be stated in bylaws. Okay, so bylaws work in conjunction with the articles of incorporation to form the legal backbone of the business. Depending upon the bylaws only, the organization will run. Okay, so what are the common types of corporations? Okay, so what are the different types of corporations? If we see, we have different types like public held corporations, publicly held corporations, closely held corporations, limited liability company. Okay, and like this one, C corporation, S corporation, non-profit corporation. But majorly we will study about C corporation, S corporation and non-profit corporation. But also we have publicly held corporation, means which is nothing but publicly held corporation means corporation whose stock is sold to and owned by the public instead of private investors. Okay, means the shares of such corporations are traded on NSE or BSE, National Stock Exchange, likewise. Okay, so there the public investors, they will purchase there. Okay, so that is a publicly held corporation. And if we see closely held corporation means a corporation whose shares of common stock are owned by relatively only a few individuals and are generally unavailable to outsiders, means within the corporation they will purchase. So those are closely held corporations. And limited liability company, LLC, we will call it as, okay. So it is also a form of business organization with liability shield advantages of a corporation, means whatever corporation has the benefits, okay, advantages like limited liability, continuity, like double taxation, so likewise uh, feasibility of taxes. So all these can be seen in this limited liability company, all advantages of corporation, okay. Flexibility in taxes, if we say, okay. So all these can be seen in limited liability company, means the liability will be limited. So this is another type of corporation. So from other than that, we have to study specifically about this C corporation, S corporation, non-profit corporation, okay. So basically if we see how the common type of corporations can be formed, means how the formation will be, means depending upon profit and non-profit. So if we see about profit, means the basic aim of the corporation will be the profit motive. Here non-profit motive. So profit means they will receive in the form of dividends. Here tax exemption can be seen and there will be no paying of profits to the shareholders or paying of dividends, okay. Here it cannot be seen in this non-profit entity, okay. So if we see about C corporation, so what does C corporation means? So if we see what is a C corporation means, okay, under C corporation owner receives profits, okay, but tax should be paid, no. So taxes, okay, taxes are levied at individual level, okay. Owners are nothing but the shareholders of the company, stockholders of the company. So taxes will be levied personally on those individuals. At the same time, corporation itself also, as a business entity, tax will be paid by the business entity also. Why? Because business, here corporation is a separate legal entity, means owners are separate, company is separate. Therefore here taxes are paid by the business entity as well as by the individual level, means here we will see double taxation, okay. And if we see S corporation, okay, so under S corporation it is also similar to C corporation, but the only difference lies in taxation, means here both individuals pay here tax and business entity will also pay tax, and finally we will see double taxation. But here only the entity will pay the, sorry, the shareholders will pay the tax, okay. So here if we see S corporation is created in the same way as C corporation, but the differentiation is owner limitation and tax purpose. Tax purpose in the sense shareholders and not taxed as separate entity, okay. Tax is levied on or else shouldered by shareholders on their personal income tax returns. So the basic difference between C corporation, S corporation is ownership and tax, okay, ownership limitations and taxation, okay. Now if we see non-profit corporation, so the difference lies again in taxation. So here both of them will pay tax, C will pay, S will pay, but under S only shareholders pay. Here both paid at individual level and business entity level. Coming to non-profit corporation, exemption is seen, so they are exempted from taxation, okay. Why? Because Non-profit means they are working for charitable purposes, educational purposes, religious and organizational purposes. Okay, so any contributions, donations, okay, or revenues received are retained in the entity to spend on the operations or else expansions of these charitable actions only, but not tax is levied on that particular amount. Okay, so these are the three main types of business incorporations. So again I am repeating here under C and S, if we see differentiation in ownership and taxation. Okay, so ownership means C corporation, it protects the owner's personal assets from creditors. At the same time, it can have unlimited number of owners, okay, and multiple classes of stock. Unlimited owners for C corporation, and here we have limitation, 100 shareholders should consist for S corporation. Okay, and if we see here under taxation also, if we see here, double taxation is avoided here. Okay, why? Because it is not required to pay corporate income tax on profits of the company. All profits or losses are passed on directly to the shareholders of the company. Okay, so it is a special structure of business ownership, we can say. Why? Because they avoid double taxation. Okay, so these are the three different types of corporations. And if we see advantages, so what are the advantages? Means first one is separate legal entity. So in features only we have studied about it. Separate legal entity. Company is different, owner is different. Okay, owner is different, company is different. If at all the company went into debts, means okay, owner or else the stockholders are not responsible personally. To what extent they purchased in the company, to that extent of shares only they are responsible. Okay, so other than that, if at all the company have any assets, so those assets will be sold and paid. Okay, paid the debts. So it is considered as a separate legal entity. It means that owners are safeguarded or else stockholders are safeguarded. Okay, and means we can treat that independent from its owners. Separate legal entity means owners are independent and considered as a legal entity. This legal entity may conduct business, it can own properties. Okay, at the same time this company or else a corporation can enter into contracts, borrow money, it can be sued or it can sue on others. Okay, and at the same time it pay taxes. So in these considerations, okay, like entering into business contracts, owning properties, sue and sued, paying taxes, it is considered as a separate legal entity. If we see unlimited life, this is another advantage. Any corporation, any company, any organization wants to have a perpetuity, means continuity in the organizations. Why? Because the aim of the organizations is profit motive. So profits can be achieved if at all there is continuity in the business only. So the advantage here is unlimited life, means there is a very continuity. So stockholders, shareholders, members are the owners of a corporation and is managed by board of directors. Their death or inability to perform their duties does not affect the continuity of this legal entity. Okay, so the death, the transferability of shares, the inability, it will not affect any ways, okay, in continuation of the entity. And if we see limited liability, okay, so here if we see another thing, it only changes whenever the company's charter will enable it to either be extended or liquidated. In these situations only we can see the non-continuity of the entity. Okay, so if we see another advantage, limited liability. So from the beginning we are talking about the limited liability. So company owners are only liable for the amount they invested. For invested amount only these owners are liable. So it is a limited liability. Creditors and lenders have no claim to owners personal assets. If the company have these creditors or else the people who lend loans to the company, okay, they cannot claim on owners personal assets. Okay, only to the amount they invested they can go for, they can sue for. Okay, but other than that they cannot sue on personal assets. So limited liability is an advantage. So another one is easy transfer of ownership shares. Okay, here shares can be easily transferred. Okay, the transfer of shares from one shareholder to another usually has no effect on the corporation of its operation or its operations. So ownership in a corporation is based on the number of shares owned. Buying or selling these shares shifts the ownership of corporation to a different investor. So a public company that has its shares traded on an active stock exchange may have thousands or millions of owners. Therefore, we can see here easily transferability of ownership shares. Okay, they can easily trade it in the market. If we see in NSE or BSE, okay, so we may purchase and the next day we may sell. So here we can see large volume in publicly held corporations. We have different type of corporations, as I said before. Okay, so in here if we see publicly held corporations, easy transferability of ownerships can be seen. Okay, and competent management. Okay, competent management means here investors or owners may not directly handle day-to-day business operations. Okay, here investors or owners are shareholders. Okay, so they vote for the board of directors who eventually hire a professional management team. Okay, so like agents who are the officers or else the managers of the corporation, like CEO, CFO. Okay, chief financial officer, chief executive officer. So all these people, they will look after the organization. Okay, so a competent management can be seen and it is treated as an advantage for the corporations. So source of capital means corporations can source funds from selling stocks and issuing bonds. Okay, means acquisition of capital. Okay, it can be easier for a corporation to acquire debt and equity. Okay, since it is not constrained by the financial resources of a few owners. That is why acquisition of capital is easy here. A corporation can sell shares to new investors, and larger entities can issue bonds to obtain a significant amount of debt financing. Okay, these are different ways to increase their capital. Okay, so buying shares in a corporations often is attractive to investors because of the advantages of the corporate form of organizations. So while larger organizations, if at all they went for issuing of bonds, means at that time these people investors, they will attract and buy shares in a corporations. Okay, so source of capital will be advantage. And if we see disadvantages, so what are the disadvantages? So incorporation cost. Okay, like incorporation cost means uh, organization cost. We can call it as organization cost or startup cost, which includes legal fees, promoters fees, the amount paid to obtain a charter. Okay, charter is nothing but a memorandum of association, likewise. Okay, written grant to start a corporation. So different fees will have to be paid. So that is known as incorporation cost, which is very more. Okay, so coming to double taxation. Okay, so double taxation means here corporate income is taxed, and when income is distributed to shareholders as dividends, it is also taxed second time, okay, as a personal income. So here we will see double taxation. Corporate income is taxed when income is distributed to shareholders as dividends, okay, and also personally income is also this shareholders income is also taxed. So double taxation is seen here, okay. And documentation. So aside from incorporation documents, companies must file annual reports, tax returns, as well as maintain accounting records, licenses, and other important documents. So this is a hectic task for the corporations in order to maintain all these type of records and documents, okay. So if we see how does a corporation dissolve, okay. So dissolve, the life of a corporate entity lasts until there is a change in charter. If at all we change memorandum, means definitely at that time dissolve, we can see corporation dissolve. Life of a corporate entity lasts, okay, or the purpose of its existence has reached, then also the corporation will be dissolved. A process called liquidation also serve. It can also be treated as corporation dissolved whenever it underwent liquidation. So whenever it undergoes liquidation process, the corporate assets will be sold and the proceeds will first go to creditors to pay off the debt. Whenever it undergoes liquidation, whenever the corporation went to losses, okay, it is very difficult to run the business. So at that time it is treated as liquidation or else insolvency or else dissolve of a company, means the company assets will be sold and first the amount will be paid to the creditors of the company, okay, and remaining will be given to the shareholders if at all anything remains, okay. So involuntary, here under liquidation we will see voluntary liquidation and involuntary liquidation. So voluntary liquidation is the company itself intentionally come forward and it states the company is in liquidation stage, or else involuntary liquidation means here the government only declares that company as the company is going to be liquidated, states as the company is insolvent, okay. So that is involuntary liquidation. So it is usually triggered by creditors or else bankrupt company, okay. So corporation can be dissolved in these cases where if it the charter of the main purpose or else the main aim of the charter is changed, means the change in the charter, the change in the memorandum leads to the dissolvency, okay, or else if at all the purpose has reached, means the corporation will be dissolved there itself, or else if it undergoes liquidation, here also we can treat it as corporation is dissolved, okay. Under liquidation we will see two types of liquidation, voluntary and involuntary liquidation. Voluntary is intentionally the company come forward, declare it as dissolvent, okay, insolvent, or else another the government declares that particular corporation as insolvent, okay. So if we see, basically till now we have studied about the sole proprietorship, partnership and corporation, the three basic forms of business organizations, okay. So what are the basic differences we can see between these three types of forms of business, okay. So basically if we want to see the differences, means under business entity, legal entity, limited liability, business taxed, one owner allowed, in these cases we can see the differentiation in these three types of business forms, okay. So if we see business entity, means, okay, is sole proprietorship, business entity or not? Yes, it is a business entity. Okay, as I said before, sole proprietor means a person who runs his business with license or without license also. Okay, so a business entity, exchange of goods and services. Okay, here if we see in partnership also, the main aim of the partnership is they want to run a business entity, and it is an economic activity. Okay, for to get profits, okay, to gain profits in that business deal. Okay, if we see corporation also, corporation is also formed by the shareholders. Why? Means to gain profits. So all these are economic activities only which are treated as a business entity. So here under business entity, if we see proprietorship, partnership, corporation, S. Okay, so if we see legal entity, so what does legal entity means? So legal entity means here they will not in, so if we see in this proprietorship, sole proprietorship, okay, they will not go for undergo any documentation, any legal aspects. Okay, if at all they want to keep any a small business like a retail shop, a small grocery shop also, okay, they don't go any hectic document presentation, registration likewise. Okay, for some even license is also not necessary. So if we see as a legal perspective, legal entity means here it doesn't require any documentation, any registration likewise. Okay, if we see in partnership also, if they want they can register or else they cannot register. So it is up to the option of their partnership firm. Okay, so if we see in corporation, yes, it should definitely undergo legal aspects, it should register. Okay, so it is, the corporation is created by laws, therefore it is a legal entity. Okay, so if we see here limited liability means under proprietorship, limited liability means no, it is not limited liability, it is unlimited, because he is a single person, he runs his own business. Okay, if at all, if he see profits means he enjoy the full profits. If at all the losses occurs in the business means he should face all those loss. So there is no limited liability, it will be unlimited liability. The same here if we see in partnership firm also. Okay, if there are two partners means both are liable to that liability. So here there is no limited liability, the liability will be unlimited only. Okay, but if we see in corporation, liability will be limited. Why? Because if the shareholders or the owners of the organization, to what extent they purchase the shares, to that investment only they are liable. So therefore it is a limited liability. Okay, so if we see business taxed, okay, taxation. So if at all we have a small grocery shop near our house, okay, so do they pay any taxes? Means no taxes will be paid but by that person. Okay, likewise in partnership also there will be no taxation. But if we see in corporation, okay, we will see C corporation, S corporation, different types of corporations. Okay, so all they will pay taxation is definite, but only for non-profit organizations they will not, taxes are exempted, but taxes will be paid in corporation. Okay, so another differentiation is one owner allowed. Yes, under single or else sole proprietorship only one person is allowed. Okay, if we see in partnership only one person means no, more than one person will be there in partnership deal. Okay, partnership firm, then only it is known as a partner, more than one person will be there. So therefore single one owner means no. Here corporation means here one owner means yes, a shareholder will be treated as a owner. Okay, so he is a one owner, but many of the persons will be there, but the owner will be only one person. Okay, so corporation S. So these are the some differences between the forms of organizations. If we see regarding control aspects also, okay, if we see control, control means under sole proprietorship, control will be in the hands of this sole owner only. Okay, So if we see in partnership firm, control will be in the depending upon the partnership deed, or else according to the partners agreement. Okay, if we go for corporations, how would be the control? Control will be more structured. Okay, why? Because we will see the chief executive of the board of directors, CEOs, CFOs, okay, then shareholders. Likewise, there will be an organizational structure will be there, and control depends upon the structure, more structured. Okay, but control here, if we see, means owner will control. He is a single person, he will control. Here, depending upon partnership agreement, control will be there. Okay, likewise, if we see continuity also, okay, continuity depends upon this person's ability. Okay, and here if we see continuity means in partnership, uh, it doesn't exist. Continuity will be there when partners they exist, there will be continuity. If there are no partners means, if partners are apart from the business means, it will not exist. Okay, if we see in corporations, okay, even though the shareholders death or else the insolvency, it will not affect the corporation's continuity. Okay, so these likewise, if we see transferability also, okay, transferability of business is difficult if we see in sole proprietorship. Okay, so transferability means here, business has to be transferred. If at all he cannot do the business, so it is difficult to give to another person. Okay, but if we see in partnership, okay, how transferability will be there? They can transfer, but it is a challenging aspect. Okay, so if we see in corporations, it is easy to transfer. Okay, so easily transferability of shares can be seen in corporations. Okay, likewise, dissolution also, here easy to dissolve. Whenever he cannot do the business, he can dissolve the business. Okay, if we see in partnership, easy to dissolve the agreement. Likewise, if we see in corporations, okay, need to follow the bylaws. Okay, in case of dissolvency need to follow the bylaws. Okay, so this is about the differences between the forms of organizations.